hello. Welcome, ladies. Hi, this is Taylor Thompson coming to you live here in the She Network Members Arena. And I have my special guest here. You guys heard her story and heard a little bit from her this last Tuesday. And so she's here. She's going to be talking about how to set up your business properly and really giving you some tools, giving you some resources that you can use, how to set up your structure, how to set it up, because it's more than just about making money, right?
Yes.
You got to have a structure. And so she's going to be here talking to you about and giving you some resources and equipping you with some strategies and ways for you to go about doing this. So Lorna, how are you?
I'm fantastic. It's so great to be here. Excited to share this information that's just so important for a lot of new entrepreneurs don't know, like how to legitimize your business and protect yourself. And so I'm really, really excited to be able to share that with your audience.
Well, I'm going to give you the stage. I'm going to pop back here and I'm going to give you the stage and you can take off. So how about it? Okay, we'll see it. Okay.
All right. I'm going to go ahead and share my screen here and give it full screen. Alrighty. So I hope everyone can see this. I'm super excited. I want to talk about business fundamentals today. And this is the information that you need to know. As you're an entrepreneur and you're just thinking like, okay, well, I just want to make some money and I want to, make money and have my business. And, a lot of people don't teach you anything. And it's important to know what it is that you need to know when you are starting your business. So we're going to talk about business fundamentals. My qualifications for this is that I am an MBA. And so I want to share this information with you. So there's different types of structures that you can have as a business owner. And it is very important for you to know sorry guys, I have like some audio going. I wanted to watch in case anybody had some comments on the Facebook chat. So I was trying to get the audio stopped. So type of structures. You have your sole proprietor structure. And this is what, if you are just starting your business and you haven't set up anything, and you are just like, hey, I'm just making money, and at the end of the year, I'm just going to pay taxes on it. This is what you are. You're a sole proprietor, right? And this there's two ways to do structure as a sole proprietor. And that is just an informal structure where you are literally just, hey, I've just decided I'm starting a business and I'm not doing any filings for it. I'm not doing anything. It's just me and my business. And then you have your DBA. So then you would actually go and you would file a DBA. So you would, with the county, you would register. And in North Carolina, where I live, you would register your DBA just with the same place that you would register your property, right? It's just literally that same office. And you would say, I am Lorna Moon doing business as, Lorna's consulting service. So that would be that structure. Also an LLC. So you could also assign as an LLC. And as an LLC, you are actually creating a separate entity for your business. You are not just you are creating a separate entity. As an LLC, you are protected from legal action in certain ways. This is how you protect your assets. Also, a corporation, you're setting a separate thing, a separate entity that is going to be your business, and that also helps to protect you from potential liabilities should there be an issue with a customer. So I mentioned with the sole proprietor, we're going to start. This is what probably most people are doing. And it's not always the best thing, but this is probably what most people are doing. And so as a sole proprietor, if you're just informal, you haven't set anything up, you're a sole proprietor, you're using your own bank account, you're commingling your funds, and you are using your own social security number, you're paying self-employment taxes, and you're reporting your earnings on a Schedule C. And that's what a lot of people do. And if you have a small business and you're not making much money, you're not planning on making much money, this is totally fine. If you want to start actually more formalizing your business and you actually plan on starting to make some money, you want to look at some of the other structures. And so some of the other structures that you can use are the sole proprietor with a DBA. That's where you actually create a separate, you start using, Lorna's consulting or Sally's consulting, and you register that. And so you start creating some separation between you and your business. You create a separate bank account. This keeps things clean. And so you know what your business spending and expenses are. And you also know what your personal expenses and everything are, and they're completely separate. Also, you could choose to use your social security number, or you also can use an EIN, which is an employer ID number. So this is when you start filling out business things. You don't have to give your social security number to everyone. You're going to start tracking everything more formally than if you were just kind of going by the seat of your pants. And lastly, you will still pay self-employment taxes no matter what. You can't avoid those as a sole proprietor at all. And you will be reporting your income and stuff on a Schedule C when you do your taxes at the end of the year. Next is a limited liability company. Your LLC or limited liability company, you definitely have to have a business bank account. You definitely have to create your employer ID number, and you're going to have some filing requirements, right? So depending on your state and your county, you will have to file you will have to create some separate filings that are in addition to your regular tax returns. You will have a choice of how you report your company. You do have to pay self-employment taxes and report on a Schedule C. Now with the LLC, why you would want to go through this and pay the filing fees, and why you would want to have these extra filing requirements that you don't have as a sole proprietor, is really this type of structure starts to protect your assets. And I'm not giving you legal advice here, and I'm not a CPA, and I'm not going to give you legal advice. So this is something that you need to talk to those entities about. But what happens here is this starts to protect you if someone were to sue you. If you were to have an angry customer that decided that they were really mad with the service that you gave them and they wanted to sue you, somebody litigious, you could protect your assets. So like if you were just a sole proprietor and you didn't have a separate business structure, somebody could possibly, get access to your other assets. You might have to, they could get a lien on your house or get at your personal bank accounts or your spouse's bank accounts, and bank balances and assets could be at risk of a lawsuit. Whereas with a limited liability company or a separate company structure, the company's assets are the only thing that would be at risk in a lawsuit. It starts to protect you. Now, again, I said only thing at risk. Please talk to an attorney, make sure everything is set up, and let them tell you exactly how it works. But this protects your assets from a lawsuit from possibly an angry customer. And if you think, well, I would probably never have an angry customer that would sue me. Maybe, maybe not. But I was married to an attorney for 10 years, and he always said, these are the things that you put in place in case something. You don't want to find out that you would actually have an angry customer who would go so far as to sue you when it's too late to protect your stuff. So limited liability company, this is what I have chosen for my own structure. This is what a lot of solopreneurs and small businesses choose. Because your filing requirements, generally they're only annual. You could possibly live in a state where you have to do them more often, but my state, and I think most states, only require you to file a separate form about your company once a year. Again, check with your state, check with your CPA. But so it's this probably the simplest of the formal structures that are out there. Then you have the corporation. There's two different types of corporations. One is a C Corp, like Coca-Cola or most very large companies you think of are a C Corp. As an entrepreneur, a solopreneur, or a small business, you would most likely not be a C Corp. So you would be looking at the S Corporation structure. And the S Corporation, like the LLC, requires you to have a business bank account. You have to get that employer ID number. This is where things start to change on the next requirements. S corporations are required to file quarterly reports. And in my particular state, the quarterly reports didn't add up to being more expensive than the LLC, but they are more regular that you have to do. So you're definitely, like, whereas an LLC, I personally do my stuff myself. I'm not going to tell you to do that yourself because it depends on your own, education and comfort level. I would recommend anyone to talk to a CPA or an attorney. I used to be married to an attorney, and I feel confident doing my stuff myself, but I'm not telling people to do that. But you'd have to file these quarterly reports, where if I was an S Corp, I probably would hire somebody to do those, where I'm as comfortable with the LLC. So the paperwork gets to be a little bit more paperwork on the S Corp. You also would pay yourself and any employees that you had. Generally, you pay W-2, so you're going to withhold and remit payroll taxes. So that's Social Security, that's Medicare, that's federal taxes. Those have to be withheld and paid monthly to the IRS and the state if you're in a state that has state taxes. So you have this tax burden too, right? And then whereas obviously you have a tax burden, you still have to pay taxes as an LLC, but you would be doing like quarterly estimated taxes and not these payroll taxes that were withheld monthly, and those reports are due every single month, so you have to do those things. This is where this next line is where the S Corp gets interesting and exciting for a lot of people, and why a lot of companies actually say, hey, for us of our size and blah, 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 it is worth it for us to be an S Corp. And this is the ability to pay dividends and avoid what they call self-employment taxes or FICA taxes, which is Social Security and Medicare, which when you add the two up, it's about 15.2% in taxes that you're able to avoid, but you're not able to avoid it on everything. You can't just not pay yourself a salary and only pay dividends and avoid that 15% tax. The government will not like it, and they will come get you. So you need to talk to your CPA about how much of what you're paying yourself needs to be salary, and how much you can pay to yourself in dividends to avoid those FICA taxes without getting in trouble with the government. This is when you need to talk to your CPA and get advice on that. But you do have the ability to do that, and if you're making enough money, it could be worth it. If you're not making enough money, you won't really be able to pay yourself a lower enough salary to take the rest in dividends to make a difference. And so it's not worth it. Again, talk to your CPA and get advice on, in your particular situation, how much money you're making or going to be making, if it's worth it to set up as an S Corp or not. And again, your reporting, you will have a Schedule C, but your reporting is going to be based on how many your pay and dividends taken. You'll have to do something called a K-1 if you take dividends. And again, talk to your CPA about what a K-1 is. So questions that you need to be asking for yourself and your CPA when you're thinking about what type of structure that you want to set your business up with. Those questions that you can ask yourself, that you can ask your CPA, that you can discuss. One, how much money am I making, or do I plan on making? So if you're just going to sell some little things on the side and make a couple $100 a month, and an S corp isn't going to make sense for you, right? So you're going to look at structures that are going to make more sense for that. Or however, if you're planning on making 10 grand a month, 20 grand a month, 100 grand a month, whatever, that's going to be a different conversation. So how much money do I plan on making? And what is my risk of being sued, right? If you knit baby hats, and what's your risk of being sued versus if you are a real estate investor, or if you are a coach, or selling e-com products, whatever it is, what are your risk of being sued? And again, talk to your attorney, talk to your CPA about that. Think about what you have. Also, what assets do I have to protect if you were sued? If you have a spouse that has a lot of money and a high-powered job, and y'all have boats and houses and cars and all kinds of stuff, and college funds for your kids, you're going to want to protect those things, right? You're not going to want to just like hope and pray that you never get sued. Also, who's going to handle my taxes and reporting? How complicated a structure you choose. If you're going back and forth between an LLC and an S corp, who's going to handle your taxes and reporting may weigh into that decision. If you think I'm going to do my own bookkeeping, you might not want to look at the S corp unless you're really good at bookkeeping and taxes. So those are things to think about. And again, who will handle my bookkeeping? Is it me, or is it somebody I'm paying? If it's a professional, you can go with a more complicated structure. If you're going to try and figure it out, do not choose a complicated structure and do it wrong, because the government does not care that you didn't know what to do. They're going to expect you to have hired the right people. Okie dokie. Resources for setting up your company. IRS website, this is where you're going to go to register an employer ID number. It only takes like a few clicks and a couple of minutes. It's super easy to do yourself. Online filing services will charge you like $75 or $80 to do this particular piece, and it is not worth it. It literally takes 5 minutes. So opt out of doing the EIN, having someone else do your EIN and do it for you, because it just takes a couple seconds. Your own county, whatever county you live in, look at their documentation requirements and what their requirements are for setting up a company and setting up an entity. The county where you live and the state where you live is going to have the information that you need to do. And if it's confusing, because a lot of county websites are confusing, that's fine. If you're like, this looks like I'm not sure how to do it, I don't want to do it wrong, online filing services are amazing. I personally have used Biz Filings. My ex, who was an attorney, used Biz Filings for all his customer stuff. LegalZoom and Rocket Lawyer are two other things that do the same. And they have packages where they can set up your company structure and do all the documents, and they'll send you like everything that you need, and it just costs a few $100s. Other options, talking to your own local attorney if you have a relationship with one, or a local CPA if you have a relationship with one, and you want to meet with somebody face-to-face to explain everything to you. Choose somebody who's local in your area who can help you. Lastly, you can do it yourself. If you have a county that makes the documents really easy to find and understand, you can do it yourself if you have that level of comfort. If you are slightly nervous about that level of comfort, please hire someone to do it. The online filing services are very efficient, and they can get it done for you very quickly. That is what I have to share. Thank you. Stop sharing. Boom.
Hey.
Hey! I couldn't see my face, so I hope everybody could hear and see everything.
Yeah, no, it was great. It was so plain. And here's the thing, like, and I know it's like, ladies, like, this stuff is so boring and so tedious, and it's like, but it is one of those things that if you're doing business, that you need to be at least equipped with the information and knowledge to know the questions to ask. So as Lorna said, she's not an attorney. She's not an accountant.
Yeah.
This is speaking from business experience and having the experience to know, okay, these are all the different ways how to set up a business. You need to find, if you're doing, first of all, figuring out where you are in your business, much business that you're planning on doing. That's the first thing, is identifying yourself in that place.
Yeah.
And then finding, a certified public, my recommendation is to find somebody that's certified
Yes.
in doing that. Because if you're in business for yourself, most people don't understand how many write-offs they have and having a business entity for yourself, and how many things you can actually write off, and how many things that by not having a business, you're actually paying more taxes on. How much, like my friend Courtney Epps, she is a certified, if you don't know her, she's actually a contributor here. She is a certified public accountant. She has women in this space, in the entrepreneurial space. Definitely connect with her. You guys have seen her on here and or inside of this group. But, knowing the questions to ask, educating yourself on just a few things, then having that conversation to be able to identify, okay, which one is the best choice for me at this moment. So I can be set up and protect myself, protect my family, protect what I currently have, because you never know. You go into business and you think that would never happen, but famous last words, right? Last words that we've all experienced, and you being married from an attorney, I'm sure you can see that firsthand.
Yeah. People think, oh, well, nothing's going to happen, or I'm just in this kind of business, nobody would ever sue me. And, and they're like, well, I don't really have anything. But then they think, but if you have a 401k from a corporate job, or if you have your kids, college funds that you've been saving in, and you think, well, I'm not a millionaire. People, the wrong person with the bee in their bonnet for you can make your life very, very painful. And so it's really, really important to think about those things and protect them, because it's really not that expensive to do. Because I have an MBA, because I was married to an attorney, because, I have a lot of experience, I do it myself. It cost me a few $100s to have one of the companies do my documents, the filing at the end of the year. I think it's like, in my state, it's around $200 for the LLC. And I use TurboTax for my taxes. And again, because I have so much experience, I do have a big handle on all the things that I can write off.
Yeah.
And so, this doesn't have to be like, oh my gosh, thousands of dollars a year are going to be, I'm going to be spending. And so I better just use my own, bank account and just, hope nobody sues me. It's, it's really not that expensive. And you can write all those things off that you spend for the, for protecting yourself or your business. So it's a tax write-off too.
I love it. Well, Lorna, this has been so helpful. I just thank you so much for taking time out of your business today to share your wisdom and, help equip the ladies with the tools that they need to set up their business properly. Really, really appreciate it. Really appreciate your energy and appreciate your wisdom. So thank you so much. Appreciate it. Okay, ladies, that's it for us. Thank you for tuning in, and we will see you next week. Bye-bye.